Welcome to Chain Bureau, smart crypto insights for smart investors. In this explainer, we're going to demystify the world of cryptocurrency. And just to show you how big this world is getting, let's kick things off with a pretty staggering number. 861 million. That's how many people are projected to be using crypto globally by the end of 2025. I mean, that is a massive leap. And it shows that crypto is really moving from being some niche interest to a full-blown mainstream asset class. So to help you navigate the space, we've broken this whole journey down into 5 key parts. We're going to start with the absolute basics. What even is cryptocurrency? Then we'll walk you through how to start investing, cover some smart strategies, touch on the not-so-fun stuff like taxes, and then wrap it all up with your keys to success. All right, first things first, what exactly are we talking about here? What is cryptocurrency? The easiest way to think of it is as digital money. But here's the key difference. It isn't controlled by any single bank or government. Its security is actually built on really complex math problems, something called cryptography. And the technology that makes it all possible is the blockchain. You can imagine it like a giant, global, public digital receipt book. The cool part is, once a transaction gets added to the book, it can't be changed, ever. So these concepts give us crypto's 3 core features. First, it's decentralized, which means no single person or company is in charge. Second, it's transparent because all those transactions are on that public ledger for anyone to see. And third, it's immutable, which is just a fancy way of saying once a transaction is recorded, it's set in stone. This is what makes it so fundamentally different from the finance system we're used to. So now you get the what, but what about the how? Let's get into the really practical stuff, the step-by-step guide on how you can actually start investing. Getting started is actually a pretty straightforward 4-step process, and it all begins with picking the right platform to buy and sell on. Now, when it comes to choosing an exchange, there are always some trade-offs to think about. A platform like Coinbase, for example, is super beginner-friendly, but the fees might be a little higher. Then you have others, like Binance or Kraken, which might offer lower fees or a way bigger selection of coins, but they can feel a bit more advanced for a newcomer. Okay, so once you've bought some cryptos, security becomes absolutely paramount. Think of it like this. A hot wallet is connected to the internet. It's kind of like your everyday physical wallet. It's convenient, but also more vulnerable. A cold wallet, on the other hand, is like a digital safe. It's kept completely offline, which makes it way, way more secure for storing your assets for the long term. By the way, if you're finding this guide useful, please do us a huge favor and hit that like button. It really helps the channel grow. And hey, don't forget to drop a comment and subscribe for more smart crypto insight. All right, so you're all set up. Now let's talk strategy. Crypto is, famous for its wild price swings, but there's a really popular approach that can help you invest without all that stress. It's called dollar cost averaging, or DCA for short. And the idea is really simple. Instead of investing a big lump sum all at once, you invest a smaller, fixed amount on a regular schedule. Say $50 every single week or every month, no matter what the price is doing. The biggest advantage of DCA is that it pretty much takes all the emotion out of investing. You automatically buy more when the price is low and less when it's high, which really helps smooth out all those bumps. But of course, it's not perfect. You might miss out on some huge gains if the market suddenly takes off, and those little transaction fees can start to add up over time. And for those of you who want to take a more active role in your trading, you can get 24/7 access to over 5 powerful trading indicators from our partners at VIP Indicators. They're designed to help you predict any trading market with up to 93% wins, and they work on any device. If that sounds interesting, go ahead and check out the link in the bio. Investing smartly also means staying compliant. So let's tackle the super crucial topic of how taxes and regulations apply to crypto. So in the US, any profits you make from crypto are taxed. Here's how it works. If you hold for less than a year, you pay tax at your regular income tax rate. But if you hold on for more than a year, you generally get to pay a much lower rate. And listen, this is a really key detail. A taxable event isn't just when you sell for dollars. It also happens when you trade one crypto for another, or even when you use your crypto to buy something, like a cup of coffee. Yeah, really. The good news in all this is that the regulatory landscape is actually becoming a lot clearer all over the world. Major economies like the EU and the US are finally establishing comprehensive frameworks, which is a really positive sign. All right, let's bring it all together. I want to leave you with 5 absolutely essential rules to guide you on your crypto journey. These are your keys to success. First,
Always do your own research. Second, prioritize security. Use strong passwords, two-factor authentication, and a cold wallet. Third, diversify your investments. Don't put all your eggs in one crypto basket. Fourth, start small with an amount you're actually comfortable with. And finally, never stop learning. This is how you navigate this space responsibly. We really hope this explainer helped clear things up for you. If it did, please give this video a like. It helps us reach more curious learners just like you. And don't forget to comment with your questions and subscribe to the channel. And one last time, for all you serious traders, get 24/7 access to powerful indicators designed to predict any market with up to 93% wins from VIP indicators. You know the drill. The link is in the bio.
At its very core, this technology represents a pretty fundamental shift in how we all think about money and value.
It's a journey that definitely requires preparation and caution, but it's also one that offers a look into what's coming next for the entire world of finance. So the real question is, are you prepared?